Hi everybody, it is me, Corrie Sommers, your local Los Angeles luxury realtor. Today I'm here with Phil from 1031 Exchange Resources, and we're going to be diving into what exactly is a 1031 exchange and how you can avoid paying capital gains on your investment property. You're not going to want to miss this. Stay tuned and be sure to click the subscribe button below if you haven't already and the bell for updates. We'll be right back. All right, so Phil, thank you so much for joining me today. And we're really gonna get into the nuts and bolts of what exactly a 1031 exchange is. And for everyone that hasn't heard of it or is thinking about buying investment property or thinking about selling their investment property, this is a way to avoid that big hit of capital gains on taxes.
That's right, Corey. When you sell a piece of property, you have to pay capital gains taxes. Up to 20% to the federal government, then you have to pay the health care program. Over $200,000 of gain as an individual or $250,000 as a married couple, you pay an additional 3.8%. In addition to that, you pay the state of California or wherever state you reside in, and where the property is located in California, up to 13.3%. And then lastly, you pay a 25% tax on what they call the recapture depreciation. And
so that can really add up.
Oh, you're looking at of your gain somewhere between 28 and maybe 45% taxes to the government. But don't worry, they know what to do with it.
I mean, and that can be kind of scary. And I think sometimes some people get really nervous and don't want to sell their investment property because they think they're just going to get hit over the head. And as you said, it could be anywhere from 28% to 45%. And I'm assuming that some of that depends on how you file your taxes, who your tax prep is, if you've done upgrades and things along the way and deducted those things, correct?
All that factor into it, and that's why you need to go talk to your CPA to find out what your exact gain is, and then ultimately they'll figure out what the taxes would be. But the beauty about the 1031 exchange is Corey, if you're selling rental investment property, the government will let you sell that and do a 1031 exchange into other rental or investment property, thereby deferring. It's not tax-free, it's tax deferred. It allows you to defer that gain into the next property so you don't have to pay the taxes.
So let's just say I bought a small apartment building, maybe 8 units, and I bought it 7 years ago. And I'm saying, hey, I'm getting a huge, profit right now if I sell, and I want to step up into a 24-unit building. So I would then sell it, but how do I go about doing the exchange? What do I need to know?
First thing you do is have some language in your escrow contract, or your sales contract, that says that you are doing an exchange and that you're going to bring a facilitator in.
Very important, and your agent should know that.
Absolutely. Sometimes I get calls after escrow closes and it's too late. It became taxable. So we set that up before escrow closes.
Right.
Number 2, you have 180 days to close whatever you're going to buy, whether it's a 24-unit building or you want to buy multiple buildings, because the purpose of the exchange is to create more cash flow.
So something I think is very important about what you said, if you own one income property, whether it's a home, an apartment building, a condo, or whatever, you don't have to buy just one more property. You can actually take those proceeds and buy a couple in a 1031 exchange and have your capital gains deferred.
Not only deferred, but you're not limited to where you buy those. It can be anywhere in the country.
Which is amazing because
Yes,
there's so many opportunities across the country, not just here in California.
And what if, Corey, you wanted to sell your residential building and you wanted to buy maybe one multiple unit residential building, but a commercial building as well? The government will let you do that in a 1031 exchange as long as what you're selling and what you're buying is investment or income or business use.
That is amazing. Now, one thing I just also want to bring up, just for clarity's sake, if, let's say, you've lived here in Southern California for 30 years, and if you sell your home today, you're going to sell for almost $2 million, and you bought it at $300,000, that's a pretty big spread. So maybe you're thinking, this is the time to go and buy investment property. Obviously, you can buy investment property, but that's not quite what we're talking about with a 1031 exchange, correct?
Well, the purpose of it is to expand the equity that has grown over all those years. So it'll give you a better rate of return based on the number of doors that you can buy that will pay you income every month.
So if you're selling your primary residence,
principal residence,
so that's
doesn't
what I'm
count.
talking about,
Yeah,
right? So that's the one caveat to this to understand. If you're selling your own home and you're thinking, I'm going to take these proceeds and invest it into investment property, that's great, but you are going to have some sort of gain. But that's kind of a whole nother topic, and you need to talk to your tax guy, because if you own your property for over 2 years, it means one thing, etc. And of course you've had some sort of depreciation and things like that. So we're strictly talking about investment properties. And so as you said, your agent needs to write into the contract that this is a 1031 exchange, and you have 180 days to identify,
Close the purchase
of the investment property.
based on the day that the sale closes.
And how many days do they have to identify the property?
45 days,
45
the first
days.
45 of the 180 days. Identify means to declare what those replacement properties that you're going to acquire are. And under the 3-property rule, the government will allow you to name up to 3 properties. And then ultimately you can buy anything off that list you want, any or all.
Recap this one more time. In a 1031 exchange, you're going to be working with your agent, and you want to write that this is a 1031 exchange into the contract. You have a total of 180 days to close on the next property or properties, and they have to be identified within 45 days. And this is where someone like you and your company come into play, because there's a whole process and paperwork, and it has to be handled in such a way by someone like you guys,
Right.
You know.
Right.
And so you're basically dealing with, explaining to everyone, is it just the paperwork, the legalities? Are you filing something with the government? How does that work?
We have to set up the documents with the escrow company, both on the sale and the purchase end.
Mm-hmm.
Second thing is that we have to hold the funds in between escrow. The government mandates that. It all has to go into the acquisition. We take the identification sheet. Ultimately, when we go into the closing property, we set up the documents for that. The client will tell us when they authorize us to wire the funds, because we can't move those funds without the client giving us a direct written authorization to move their money. And we move it into the acquisition property. And then ultimately, when it's all said and done, we will send them a statement to give to their CPA, so they'll know exactly how to mark their tax return.
So this is really good information, and hopefully this is helpful to you guys out there. So again, if you have an investment property, you're thinking about selling, or you're thinking about buying, and just kind of we're curious as to what the process would be, what the ramifications would be down the road when you sell, don't be afraid, don't be nervous. You can always avoid the capital gains, or at least defer it indefinitely, would you say? Or
Till you die.
till you die.
Or what many people do is they get a trust. And then the properties are in the trust, or if they own their properties in LLCs, the trust is the shareholder of the LLC. So when they pass away, it goes to their heirs at a value, the date of their death, not what the original purchase price was, not the original basis, which means they can turn around, sell the property.
And don't have the capital gains.
I'm telling you, isn't it wonderful?
Avoid paying taxes. Oh, I didn't say that. But so again, it's an easier process than I think a lot of people realize. And I just want to encourage everybody who are investors, or maybe this is your first time investing, first time thinking of selling, or you're a little nervous about the ramifications, don't be. There are professionals out there that are going to help you through this process. And Phil is just one of the many. Exchange Resources is his company here in Los Angeles. And of course, you want to make sure that your agent understands the process too, because you guys are going to be working together. There's going to be a lot of moving parts. You're going to need to find other investment properties rather quickly, and so just be prepared for that.
And your viewers can call me if they just need some information. I'm delighted to answer all their questions with no obligation.
Right. All of Phil's contact information is below, as always. So thanks again, Phil, for joining me today. And hopefully this information has been valuable to you. If you just need a little bit more, contact information is below. And we might put together a little handout to help you just with the key points of this as well. So look for that information below. And everybody, thank you so much for watching. As always, please subscribe to my YouTube channel, click the bell for updates, and we'll see you again next week.